Welcome back to Investing Talk podcast. Today, we're zeroing in on a company that's really ignited conversations in the biotech world, QuantumSci. The big question we're tackling for you today is, well, is now a good time to consider buying shares in QuantumSci? We've pulled together all the latest reports, analyses, market insights, everything we could find to help you navigate this intricate landscape. Before we really jump in, though, just a quick note. If you find these insights helpful, please hit that subscribe button, maybe give us a like, and definitely leave a comment. Your support truly helps us bring you more of these explorations. Oh, and if there's a specific company you'd like us to look into for a future segment, just let us know in the comments below. We do read them. And, if you really appreciate the work, you can consider buying us a coffee. Every bit genuinely helps keep this research coming.
Absolutely. And today, we're going to break down QuantumSci through, well, multiple crucial lenses. We'll scrutinize its fundamental health, the growth trajectory, examine its current market valuation, and what that really tells us about investor expectations. We'll also delve into what the technical charts are signaling, and then finally explore recent news and potential future catalysts, things that could really shape its journey. Our aim is pretty straightforward: to provide you with a clear, actionable understanding of what's truly significant about this company right now.
Okay, sounds good. Let's unpack QuantumSc's core business first, because the numbers, well, they jump off the page immediately. Our sources highlight truly impressive revenue growth.
Yeah, it's quite something.
I mean, year-over-year increases ranging anywhere from 84% to a staggering 183%. It's pulled in around $3.44 million in trailing 12 months revenue and projected about $3.06 million for 2024. This kind of explosive top-line growth in biotech. Well, you don't see it every day. What exactly is driving this momentum? What's behind these remarkable figures?
Well, what's truly fascinating here, I think, is that this kind of, hyper growth signals a rapid and increasing adoption of their next generation protein sequencing technology.
Yeah.
NGPS, they call it.
And GPS, right?
Yeah. QuantumSc specializes in these single molecule detection platforms. You should think of their proprietary Platinum and Platinum Pro instruments not just as like standard lab gear, but more as revolutionary microscopes. They're capable of identifying individual protein molecules and sequencing them at a speed and scale that was, well, previously impossible.
Okay. Single molecule. That's the key differentiator then.
Exactly. This direct single molecule approach is a fundamental shift from, the traditional bulk sequencing methods.
Yeah.
They're addressing critical, often unmet needs in fields like protein sequencing, antibody characterization for drug development, biomarker identification for disease diagnosis. Really important stuff. This isn't just like an incremental improvement. It's a proprietary technological edge. It suggests a genuine competitive moat as this technology continues to mature and hopefully gains broader acceptance.
Yeah.
The market seems to be recognizing that disruptive potential.
That sounds genuinely exciting, and the technology certainly feels like it could be a game changer, but and here's where it gets really interesting for a potential investor, right? Where we need a dose of reality. Despite this incredible top-line revenue growth, the company isn't profitable.
No, not even close yet.
Our sources reveal a net loss approaching $100 million. $100 million, with negative earnings per share around negative 0.66 to negative 0.68.
Significant losses.
And it also has a rather sizable free cash flow deficit, about $55 million. For a company bringing in, roughly $3 million in revenue, that's a serious burn rate.
It is.
So how do you reconcile that kind of explosive growth with such deep unprofitability and cash burn? Is this a massive red flag, or is it just the cost of doing business in this cutting-edge space?
That's a crucial question. It really highlights the classic biotech dilemma, doesn't it? The losses and the significant cash burn, while, yes, they are substantial, they aren't necessarily a red flag in isolation for a company at this specific stage.
Okay.
It primarily reflects that QuantumSc is still squarely in a heavy research, development, and importantly, commercialization phase. This is pretty typical for growth stage biotechs investing aggressively to establish their tech, scale manufacturing, expand market penetration, all for a truly novel product.
Right, building the foundation.
Exactly. They are essentially burning cash to build out their ecosystem, do more R&D, push their instruments into more labs, more institutions. While the sources don't detail their precise debt levels, given their market cap and funding history, it's reasonable to infer they've managed to secure capital to sustain this, for now at least. So for you, the learner, this means you're investing in a vision, really. A bet on potential future profits and market dominance, not current earnings.
A long-term perspective needed then.
Definitely. And a high tolerance for that early-stage financial volatility.
Right. Speaking of future potential, let's talk about valuation, how the market is actually valuing this company, because that's where things can get a bit, well, dizzying. QuantumSci is a small-cap biotech, market cap hovering around $356 to $363 million.
Small cap territory.
Since it's unprofitable, the PE ratio is negative. Not helpful, as we know.
Useless metric here,
Yeah,
though.
but the price-to-sales ratio, the PS, it stands out. It's approximately 100 times.
Yep.
100 times. That seems incredibly high, especially compared to more established companies. What does a PS of 100x truly signify here?
Yeah, if we connect this to the bigger picture, a PS ratio of around 100 is, well, it's extraordinarily high, no question. To put that in perspective, for a mature, profitable company in, say, traditional manufacturing, that would be alarming, maybe catastrophic.
Right, completely different ballpark.
Totally. But for a company like QuantumSci, pioneering this novel NGPS tech, that 100x multiple is the market's way of pricing in future exponential growth. It's a direct bet on the revolutionary impact and widespread adoption of their platinum instruments.
So it's all about the potential disruption.
Exactly. The potential to disrupt an entire scientific field, a market that analysts think could be worth billions down the line. This isn't a valuation based on current earnings at all. It's based on projected revenue, orders of magnitude higher than today's levels. While there isn't, a detailed public DCF model readily available, these elevated metrics clearly show significant growth expectations are baked in.
Okay. And what about analysts? Are they buying into this potential?
Well, it's worth noting they do have an average consensus price target between roughly $2.38 and $3.48, which suggests, anywhere from 30% to maybe 75% upside potential within a 12-month horizon.
Okay. So still some optimism there, even with the high valuation.
Yeah, definitely signals an undercurrent of optimism about its future, despite the current metrics.
So high hopes clearly baked into that valuation. Now let's switch gears. Let's look at the technical side. What the charts are telling us about the stock's recent behavior. QuantumSci, it's been trading around what, $1.76 to $1.98 a mate recently?
Yeah, in that tight range.
But its 52-week range is staggering, from $0.61 up to $5.77.
Ooh.
That sounds like a wild, almost unmanageable ride for an investor. What causes that kind of extreme volatility?
You're absolutely right. That's not just notable volatility. It's a defining characteristic of this stock, a real roller coaster. The sources confirm its beta is around 2.9.
2.9. Okay.
So for you, the investor, that means QuantumSci stock tends to move nearly 3 times as much as the overall market.
Wow. So big swings are just part of the deal here.
Exactly. If the S&P 500 drops 1%, QuantumSci could realistically drop 3% or rise 3% on a 1% market gain. It amplifies everything. This high beta is fueled by several factors common to early-stage biotechs: reliance on future news, sensitivity to R&D results, relatively lower trading volume. It all magnifies the price swings.
Makes sense. Any positive signs in the charts?
Well, on the positive side, if we look at the moving averages, the 50-day simple moving average, the SMA, is currently around $1.70, and that is now above the 200-day SMA, which sits around $1.52.
The golden cross.
Precisely. That's typically considered a bullish crossover pattern. Suggests a potential shift towards an upward trend, at least in the medium term.
There's always a but, right?
Well, yes. We also have to observe that the price remains near the lower end of its recent ranges. It hasn't really broken out decisively yet. And momentum indicators like the RSI, the Relative Strength Index, they're around 46. Pretty neutral.
So not overbought, not oversold, kind of in limbo.
Yeah, it suggests neutral momentum. It leaves room for movement in either direction, really.
Okay, so that 50-day crossing the 200-day is a classic bullish sign, absolutely. But like you said, it's still trading near the low end of its annual range. Couldn't that just be, a fragile recovery, maybe not a real breakout yet?
That's a fair and critical observation, yes. While the crossover is a positive signal, its position near the lows does indeed suggest this recovery is tentative. It's not a definitive breakout, and savvy traders would definitely be looking for confirmation above key resistance levels before getting too excited.
Right. So speaking of levels, for someone watching these charts closely, what are the critical support and resistance areas they should keep an eye on?
Good question. For support, it looks like there's a pretty robust floor established near the $1.50 to $1.60 range.
Okay, $1.50 to $1.60.
Yeah, that area has acted as support in recent trading, so it could potentially limit downside risk from here. On the upside, immediate resistance is likely around the $2 mark. That's a psychological level, and one it's struggled to hold consistently in the past.
$2, okay.
Beyond that, the most significant resistance is way up near its previous 52-week highs, stretching into the $5 plus territory.
Which would take a major catalyst to reach again, presumably?
Oh, absolutely. That would require some seriously positive news flow. So overall, the technical trend is cautiously positive, maybe, but the volatility demands a vigilant approach. It's certainly suitable for traders with a medium to high risk tolerance.
Got it. Okay, moving beyond the raw numbers and charts, what's been happening in the news cycle? Any emerging narratives or analyst shifts swaying sentiment? It seems like analysts are feeling pretty good, right? You mentioned those price targets earlier, and there's a strong buy consensus from 3 analysts, indicating maybe 30–40% upside.
That's right. The consensus is leaning positive among the analysts covering it.
But are there any, red flags, big concerns popping up in recent news that might temper that enthusiasm?
Fortunately, our sources indicate no major negative news recently. No significant red flags have really surfaced.
That's good to hear in biotech.
It is. The company seems steadfastly focused on its core mission, developing the tech, expanding the commercial footprint of those NGPS platforms. There haven't been any unexpected regulatory hurdles announced or major competitive threats making headlines. Investor sentiment. Well, it's generally cautious in the broader market right now. The Fear and Greed Index shows modest fear, suggesting some caution across the board. But specifically for QuantumSc, sentiment seems neutral to maybe slightly positive. It suggests the market is acknowledging their progress without getting overly euphoric or, panicked about the risks. It feels relatively stable on the news front, for now.
Okay, so no major curveballs from the news, which is definitely a relief. But what about upcoming events? What are the key catalysts, positive or negative, that a potential investor should really keep a close eye on? Things that could shake things up.
Yeah, the most immediate and significant catalyst is definitely their upcoming earnings report. That's scheduled for August 5th, 2025.
August 5th, okay.
This isn't just about the financial numbers, though. It'll provide crucial clarity on the pace of product adoption. How well are those platinum instruments actually selling? It will also offer insights into their financial trajectory, that cash burn rate we talked about, and any revised guidance they might offer. Very important.
Absolutely. What about longer term?
Looking further out, medium to long-term catalysts. Well, continued commercial adoption is paramount. How quickly can they scale sales and distribution? That's key. We'll also be watching for new product launches or significant technology improvements, anything that expands their market or deepens that competitive moat.
Partnerships, maybe.
Strategic partnerships, yes. Particularly with major pharma companies or diagnostic labs. That could provide huge validation and accelerate growth. And of course, any potential regulatory approvals for new applications, maybe expanding into clinical diagnostics. That would be transformative. And don't forget the macro factors, the biotech funding environment, interest rates, healthcare market trends. Those will always play a role too.
Right. And every investment carries risks, especially in biotech. QuantumSc is no exception, given its early-stage pioneering new tech. What are the primary risk factors we should be acutely aware of here, beyond just the stock itself?
You've hit on a critical point. From a stock-specific view, the primary risks are undeniably that high cash burn and the continued operational losses.
Still burning through cash.
Exactly. This directly impacts their potential need for more funding down the line, which could mean dilution for existing shareholders if they issue more stock or perhaps taking on more debt. Their financial health is just deeply dependent on successful, widespread market adoption of that proprietary tech. If the uptake of platinum instruments is slower than hoped, or if a competitor suddenly emerges with something better or cheaper, well, their path to profitability gets much harder, maybe even jeopardized.
And the volatility we talked about.
And the volatility, yes. As we discussed, the stock is historically very volatile. That beta of 2.9 makes it highly susceptible to broader biotech sector swings and just general market sentiment shifts. Good company news can easily get overshadowed by a sector-wide downturn. Then you have sector-specific risks. Biotech and medical device companies face unique hurdles.
Like regulations.
Right. Regulatory issues are ever present. A new FDA guideline, a delay in approval, that can have massive repercussions. Competitive innovation is fierce too. Proteomics is attracting a lot of investment. Other companies are definitely vying for market share. And reimbursement challenges are common, especially for novel tools. Getting insurance coverage or government funding can make or break commercial success. Lastly, those macroeconomic factors. Interest rates influence valuations of growth stocks like this. Higher rates tend to discount future earnings more aggressively. And just general market volatility can hit small-cap, high-beta biotechs disproportionately hard. While their liquidity seems okay for now, that overall volatility is a significant concern for anyone considering this stock.
Okay. So bringing all of this together, the explosive growth, the big losses, the high valuation, the volatility, the promising tech, the inherent risks. Wow. What's the final verdict from our analysis?
Taking everything into account, is QuantumSci a buy right now?
Okay, based on everything we've unpacked, QuantumSci gets an overall rating from our analysis of about 5.5 out of 10. 5.5, so pretty much right down the middle.
Exactly. For you, the investor, this means it's considered an intriguing, high-potential growth story in this emerging field of protein sequencing. It's fueled by strong early revenue momentum and genuinely innovative tech. However, and this is a big however, it's crucial to reiterate, it remains an unprofitable, highly volatile small-cap biotech. That inherently places it in a higher risk category. For those considering an entry point, the suggested price range, maybe near current support, is around $1.60 to $1.80. That could potentially limit some downside risk
Okay.
for short-term trading. This is really only suitable for experienced traders who are comfortable with significant volatility. Sharp swings, remember.
Right. Not for the faint of heart.
Definitely not. They might look to that upcoming earnings report, August 5th, as a key catalyst. A possible strategy could involve a tight stop loss, maybe around $1.50 to protect capital, and a take-profit target, perhaps near $2.20 to $2.40, aligning with the lower end of analyst targets.
And for the long-term investor.
For long-term investment, it's a promising, but undoubtedly high-risk biotech play. It's only truly suitable for investors with a high-risk tolerance and a patient holding horizon. We're talking several years potentially waiting for profitability to materialize as the technology hopefully gains wider adoption.
Patience is key then.
Absolutely. Considering dollar cost averaging, buying in smaller amounts over time could also be a prudent approach here to mitigate the impact of that high volatility. But ultimately, conservative position sizing, meaning don't bet the farm on this one, and vigilant monitoring, especially around that earnings report, are strongly advised. This is not a set it and forget it stock.
So QuantumSc really presents this fascinating paradox, doesn't it? Explosive growth, potentially revolutionary technology, but paired with significant cash burn, that sky-high valuation, and undeniable market volatility. It's a company that truly tests an investor's appetite for risk, and maybe even more so, their patience.
Indeed. And the fundamental question for you, the learner, isn't just, is it a good time to buy? It's maybe more about, what kind of investor are you? Are you prepared to wait, potentially years, for profitability, enduring those significant swings along the way? Or are you looking for shorter-term moves in a highly dynamic, frankly speculative stock? Your personal risk profile, your investment horizon, those are paramount here.
Yeah, that really brings us to our final thought for you to consider today. In this world of emerging technologies like next-generation protein sequencing, where innovation often races ahead of revenue, is that promise of future breakthroughs always worth the present-day financial uncertainty? How do you personally weigh that immense potential against the current lack of profits and the high volatility when you're making investment decisions? Something to think about. Thank you for joining us for this exploration of QuantumSci. We hope this discussion has given you a clearer, maybe more nuanced picture of this exciting, yet definitely challenging investment opportunity. Until next time, keep learning and keep asking those important questions.